Okay, so the first question will go to you, Jordan, because you need to drop off in a minute. So if you can tell a bit, and then we can unravel the discussion. Where is this best option and the sweet spot actually for a corporation to build a new venture? Because it's not so obvious, it's not so easy to decide. So how you see this?
Yeah, I think for us, in terms of what we think venture building for corporates is that sweet spot. I think venture building is really great when the corporate is trying to enter new strategically relevant areas of growth that sit outside of their core business competencies today, right? So often what that means is sort of reaching new to them customer segments. So if they're enterprise focused, maybe it has an SME or an SMB focus. Often it includes building new to them business models. So if they've never done a marketplace before, if they're really about solving products, maybe it's a transition to a service-led business model. Those things are really, really great. But not only those things, I think there are two other things that need to also be true. That one that has to have the opportunity has to contribute significantly to group profits in a standalone basis. So the venture itself needs to have a clear investment case for hundreds of millions, if not billion plus of enterprise value creation. And secondly, the business needs to have a clear line of sight of how it leverages some of the scale strengths, the assets, capabilities of the corporate partner. So for our point of view, if it's not touching anything from the mothership, whether it's distribution advantages, fleet logistics fleets, real estate assets, capabilities, then it's kind of pointless. It's too far away. They probably shouldn't be doing it. But that's kind of how we see the sweet spot. I think what's helpful is also the reverse of this, of kind of what's not really falling into the venture building aspect for us. So this means to us, it's like if you're building a new product or service within the same operating business unit, I don't think that's venture building. So if you're launching, like if you're Diageo and you're a spirits producer and you want to create a pumpkin flavored rum for Halloween, like if it's in the bottle, don't want to care about it. It's not venture building. If you're launching something like a buy to let mortgage proposition in your existing mortgage lender, like that's not a venture to me. I think those are all good things and should be done, but not really appropriate for venture building. I think the other two things, which I think helpful as yardsticks to measure this by, is there are two often innovation vehicles that are helpful in certain cases, but are different to venture building. So one is kind of partnering with startups, right? And this often means taking advantage of new technologies that augment an existing process, product, or service, plus where there are existing Series A to sort of pre-Series C startups in existence. And that, for example, whether you're doing like digital KYC or AML services for a bank, or maybe you're using technologies that do fleet optimizations for a logistics operator, and there are startups there with those technologies, they're great for partnering, because what you're really doing is you're just de-risking, speeding the process of tech adoption within the operation. That's great, but that's not venture building. And similarly, the more extreme case of an M&A or an acquisition, M&A in our view works really well when you're buying a smaller version of yourself to speed up growth, right? Sort of inorganically. If you're buying startups with a brand new business model and brand new capabilities, integrating that and releasing the synergies from those acquisitions and often the valuations that you're paying, it's very tricky. By definition, there's a culture clash. By definition, in some cases, there's a technology stack clash, there's a people and process clash, there's a business model clash. And so that can be really tricky. So, but realistically, when it comes to M&A in the innovation world, often that's a reaction because you're super late and you have no other choice. But that's not venture building, right?
So if you can say, because you mentioned about those couple of examples of not venture building, but if you have like a couple of examples of actually what falls into that, the use cases. So you do a lot of things with banks, with energy companies, like what
I'll give one example, which hopefully I can do quite quickly. BNP Paribas, the insurance division, came to us with an interesting problem. So they had a subsidiary, which is in France, they're the largest provider of extended vehicle warranty and maintenance products for used cars. So what that business is, they essentially have 3,000 car dealers around France. And when a car dealer sells a used car, by law, they have to sell the car with 6 months of warranty attached to the sale. And then they try and upsell the consumer, the buyer, into some sort of ongoing maintenance product. And that's basically their business. So they've got 3,000 car dealers. When they sell used cars, they sell insurance products. That translates to about 750,000 customers or policyholders, which they're currently operating in France. And then they've got a loose relationship with 24,000 garages or auto repair shops, where if you have, a claim or a maintenance, you go to one of the garages and they process that. That's their business. They came to us with two issues. One was lack of growth. Basically, they were like, look, there's no more car dealers in France for us to onboard. Our growth is pretty flatlined. We're trying to internationalize into Italy and Germany. That's going to take some time. So growth is really stagnant. And the second issue they had was the rise of these vertically integrated digital car dealers like Kazoo and Cinch, these unicorn startups. They're essentially taking more and more of the used car sales away from the traditional car dealers and doing them purely online. And so there's a bit more of an existential crisis about, well, if those really get huge market share, then actually our traditional car dealers, which is their sole distribution channel, will start disappearing away. And ultimately they'll start potentially losing their entire core business around these insurance products. So they asked us what to build. And so we ended up building them a used car auction marketplace. And so this is where, if you're a seller or owner of your car, you put in the registration of your car, you take a few photos and videos, we enrich the data of that asset and then send it to 3,000 car dealers in France who then bid to buy the car. The highest bid wins. We transfer money straight to the seller, and then the startup picks up the car from the front door and transports it nationwide to the car dealer that won the auction. That's what it does. Makes a ton of money. It's doing really, really well. But when you think about building that startup, which is sort of this auction marketplace, what do you need to build it? Well, you need car dealers. They've got car dealers because that's essentially the demand side of this. And then you need supply, right? So people with used cars, and insurance aren't great at marketing or distributing to their current customers because often they only meet them when there's a claim.
Yeah.
But ultimately, they do have some access to those customer base, but also the wider BNP Paribas group, in terms of the bank, has other more effective distribution channels to sort of help the startup market on the supply side. So they've got basically the two core things that you need to do that, which sort of de-risks the building of this business, but more importantly, allows the venture to reach scale at significantly lower cost of investment compared to like a comparable startup in the world. It helps give you an idea. But like an insurance company would really have struggled to have done that for themselves.
That's super interesting. Thank you for that. I know you need to go, but thank you very much for that, Jordan.
Thanks, Jed. Really appreciate it.
Thinking about that case, I'm also thinking, and we see this on the, it's local versus global. So how you actually decide about building a venture. So it would be also great to start a discussion about how you can start small, because it's a big decision for a corporation to make, to acquire some shares in some early stage venture and build something from the scratch, and it's not necessarily done locally. So probably if I would go to the BNP Paribas in Poland, that we might have some problems in acquiring shares and structuring it and so on. So I think we also can deep dive a little bit how to start small, how to actually pilot the model in order to take it further. Do you guys see that kind of opportunities? How you see it can be done? How to divide this local versus global?
I can go.
Yeah, of course.
Okay. My point here is this is a little bit tricky, because this thing also applies to the last question, because in my opinion, if you want to start creating new business, what you need is to access real management. And I say that this is tricky because you can say that okay, you can start small and just with a business unit or in a country, but when you are going to try to create the real business, the new venture, when you are going to create a new co, you're going to need to access the management, and this is very important because when we start, and when I say we,
by management, you mean that people who actually are able to make a decision and they are not afraid to make this decision. Yes,
yeah.
It's not necessarily a CEO or
Exactly.
yeah.
Exactly, because market validation, market testing, MVP creation, prototyping, and everything that goes before you create the new co can be decided by the middle management of the company, and it's easier for you to start a corporate venture builder, and I speak for myself, trying to start those processes, but the real game comes when you say, hey, we need 2 million to create a new co, we need to sign this paper and blah blah blah, and you see and you realize that you don't have access to the management. So in my opinion, it's very, 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 very important to access the management first time. Also to find the sweet spot between core and non-core businesses or opportunities, because we always say that if it's very related to the core, it's going to be impossible to create a new co, and it's not something that we want if we are going to risk our own money on that business. And if it's very separated from the core, it's going to be very difficult to get the corporate on board. Not only at the beginning, because you can convince them, but it's going to be a very rough.
It will be a big discussion. Should I keep it internally? Should I create this new thing? And
yeah, exactly. And maybe it all starts well, but year 2 we need everything is going wrong. It's going to be very easy for the corporate to get down, to step down if it's non-strategic for them. And so in this case, I would say there is a third reason, which is start with the right person. Not only obviously to get the sign-in from the management, but also from the business unit. Usually this challenge, this opportunity area or this territory comes from a specific business unit or a specific territory inside the company. In my opinion, it's better to decide a smaller opportunity, but with the right person, than a bigger opportunity with one person that doesn't buy the thing. This will lead to get real advantages or real leverages, like clients, like distribution, like technology, like IP, and everything with this model relies on these unfair advantages. We usually say nowadays we are saying fair advantages because they are fair, man. From the corporate side. So that's from my side. Yeah.
Andres, because you have more probably entrepreneurial led venture builder, but your ventures also probably tend to work with corporates, and you know the model very well. Do you have any? And also Asia is a different market, so you see what kind of how corporates can test the ground, just see how to maybe make it bigger and so on, but from the smaller pilots.
Yeah, it's a good question. I mean, I would broadly agree with what Adrian is saying. We've had some experience in it, and we've had mostly negative experiences with how to strike up the right balance with corporates. So I feel that we are still figuring out what is the best approach. That what we have seen though is that you definitely need the right. So I would echo some things that Adrian says and a couple of other points. One is you need the right leadership. I don't think you can do it with middle management. You need top management. We're in Singapore. Singapore happens to have regional headquarters, so that helps. So you need at least someone at regional headquarter level. Can't be local office, unless they're just dipping their toe in it. But then you won't really be highly successful. It might be strategic for a certain market, but that's about it. I think the other thing is that what we've seen is that there's more and more appetite to try it, but in order to try it, they need partnerships. So there's an evolution towards new ways of working for those corporates, where they say, okay, we'll work with a corporate venture building partner to then de-risk ourselves for the first 1 or 2 years until we can improve the internal process. And that is something that seems to be working quite well.
Or show the results, yeah, because this is also a question. Okay,
absolutely.
so I will build something. We see this, because we are actually on the very local market, but we build companies with the global companies, and there is a lot of issues with that in terms of taking shares and making decisions. But like Adrian mentioned, and if the management is actually decisive, you're able to do it, and they secure the crucial right that they know, okay, this venture will not be sold to our main competitor. Maybe I won't take shares right now, but I have ability to tap in if the model is right. And if the model is right and the company is growing, maybe first 2 cases we will overpay for the venture at the second, third stage, but we proved that the model is right. So maybe let's take it to the global level, or let's create guidelines for markets to actually launch it on a bigger scale.
Yeah, no, I totally agree. I totally agree. What we see in Asia is the partnership economy or the partnership models are really growing. And I think the early adopters of corporates that are trying venture building are corporates that tend to be a little bit more open-minded to try different partnership models that before they never tried. And I think that's the interesting piece, where you have this insourcing of talents, or the joint venture creation, where they learn about it by actually shadowing what the corporate venture building partner is doing to become better at it themselves internally. The other piece is that Singapore is actually a very progressive policy on this. The Economic Development Board of Singapore, EDB, which is sort of the economic think tank of the government, they are co-investing with corporates. So Singapore has about 950 of the top 1,000 companies as regional headquarters in Singapore. And what they say is, look, come to Singapore, we will co-invest in new corporate ventures with you up to certain caps. It's about 500,000 USD, give or take, so that they co-invest in. And then that money can be utilized to partner with a accredited corporate venture builder, which then helps them. Rainmaking is one of them. McKinsey is another. There's a couple of other ones, to partner with them to then de-risk that initial journey. They see this as good public money spent, because they hope that after a couple of years of co-financing, corporates are getting better at doing it, and then the business case becomes easier. And I believe that model of public co-investment is something that other countries can learn from, and perhaps other countries.
Super interesting. This is in a specific field, or it can be energy, it can be banking, whatever it is.
Yeah, it's field agnostic. So the requirement they have is that you need to be of a certain size. So I think it's $1 billion valuation cap or something like this. So it tends to be larger companies, and then they have a program whereby they would evaluate you to see if it makes sense, that you're ready for it. So it's not like a blank check, and then you have to apply, and then you have to work with a accredited partner, and then there are stage gates for the accredited partner and for your corporate venture. So they're kind of trying to handhold you and to force you into becoming good at it.
Yeah, that's a very interesting thing, because if government is, we see this, there was a wave for governmental money that was dedicated to VCs, and we see how it boosted the seed market. So if you're able to create that kind of programs for venture building for corporates, I think it's very powerful. Toshu, one thing, please let us know when we need to
yeah, I'm in control of time, so we have 15 minutes left. You're on time. It's okay.
So
I think that there's an important discussion around one thing that Andrew said, which is corporates trying to create venture studios inside their structure. And it obviously is a trend right now. But in my opinion, there is a problem with that, and that problem is incentives. What do you think about this? Because corporate employees, they don't have the incentive to risk everything and create new businesses. What do you think?
Actually, it's a good question, but and also all the, let's say, failed attempts are internally built venture builders, but we see this model actually as something that can be also powerful, but it also depends what you want to create. And of course, we as external corporate venture builders would like to disagree with that, but not to demonize this. I think if you want to, there is a certain pool of talent within the corporation. This is actually the talent that probably we as the Heart are hiring for the founders of, or you as the founders for the startups that we are building, that is in the corporation but has the entrepreneurial mind. And this talent pool will exit this corporation one way or another. And then you need to, if you're able to create a platform for those people to actually build new things, but also have, and those are people who really understand what is needed within the corporation. So if you're able to create a platform for them to actually execute on this entrepreneurial talent and take a small stake from it or be an investor in the new ventures, of course, you will lose 1 or 2 or 3 employees here and there. But on the other hand, you're creating value on a totally different, let's say, dimension. And you will lose those people anyway, sooner or later. And we see that kind of course, if it's done internally by a corporation, I don't think corporation is able to, but it will take a lot of time to create the right guidelines for it. And you need to have a very specific mindset to do it. Maybe it's better to partner with some external venture builders to create processes for it and so on and so on. But it should be internal program. But I think that kind of entrepreneurship programs that are very pragmatic and focused on building things, it is actually a very big incentive, of course, for a small number of people, but it's a very big incentive. We see Standard Chartered Ventures is working like that. Yes, they are taking internal ideas and they are giving people actually ability to build something very, very new, and this is exciting for employees.
Yeah, in addition to that, I would say there's a couple of, I think there will be a lot of experimentation happening in this space. I totally agree, incentives are key. And what we've seen in Asia is that there's more and more corporate venture buildings that are advocating for an exit at a certain milestone. So whereby talent will be working on a certain idea, but then if it hits a certain milestone, so they get a salary, they are de-risked, they get a certain percentage vested, but then if they hit a certain milestone, or the venture rather reaches a certain milestone, they can get a guaranteed exit, right? And either exit or they can sell part of their shares at the secondary market to be able to liquidate a little bit. So that is happening now. Obviously, that comes with certain governance questions and policy questions for that corporate. So they have to decide what they want to do with this. The same is now, I see the same happening with corporate venture builders that are service providers to the corporates, and that are also building deals whereby they would co-invest some risk capital, but they would get some upside if it goes well, and it would get a multiple, an exit with a multiple after, let's say, 2-3 years. This also solves for the corporate venture builder, or rather for the studio, it solves another important problem, which is liquidity for the central talent that is working on ideas. They don't necessarily want to wait 7 or 10 years or more, right? They maybe want to get some kind of building exit after 3 years. They might not get a huge exit, but it's an exit nonetheless that might be life-changing.
Yeah, it's something slightly different than you probably will get from the corporate side. It's a different dynamics of earning money.
Yeah, and it's also very compatible with this new trend of like COVIDpreneurs, which is you want to be based from Ibiza or from Bali, and you want to have the flexibility to work.
You're one of COVIDpreneurs.
Yeah, I'm one of those COVIDpreneurs. Absolutely, absolutely. Yeah. So the idea of like flexibility in lifestyle, I think, is becoming a major trend for certain top talent that say, you know what, I've run the rat race. I know what it is. I have certain skills. I wanted the flexibility for my family and for myself, but I still want to be involved in ideas that are quite big and have large scale. And I think if corporates know how to tap into that and create that platform and that mechanism, it's a win-win.
Yeah, that's a very interesting thing. But it takes a lot of courage from the corporate side, I guess, to do it. But if done right, I think it can be very, very beneficial. Also, Andres, I had one question to the thing that you mentioned before. How you see in Asia, how you see how if you pilot something and you start small or you do a bigger thing, how you also see measuring the success and how you see the success ratio and the success points, how to rightly assess it, and when is the point when you want to actually go to this headquarters or to show what's been done.
Well, honestly, I think actually your presentation spoke to some of that. I totally agree with you and Joseph were saying I mean, you need to make sure that first of all, it's whatever you're building is appropriate for your strategy is appropriate. So it needs to be strategically aligned to what you're doing. It needs to sit out of the core. It needs to be something new and meaningful, but it needs to have a standalone investment case. If it doesn't have a standalone investment case that can be measured, then I've seen examples, unfortunately, that are where the investment case is not always there, and that makes it extra hard because then it's only a matter of time before you're called out as a corporate in doing that venture, and then it becomes a liability, and then the team behind it gets demotivated. They're not incentivized the right way. So it needs to have a strong investment case, and also it needs to be orbiting around the. If you think of a corporate as a giant hairball, and they're, sorry for using that metaphor, and you're like orbiting around the hairball, it needs to be just at the right length, not too far off so that it drifts up, and not too close that it gets entangled in a hairball of process and procedure of the mothership. So provided those things are true, then you probably have already some KPIs and some metrics that you have for your for that investment case, and then it's about measuring how you stack up against those. If you can't achieve those, then probably you're off on the wrong start.
Okay, so you think you should have the right KPIs, let's say, in order to do it, yeah? So, Andres,
yeah, whether it's financial or non-financial.
Yeah, okay. Adrian, do you see like how you, as a corporate venture builder as well, like you work with multiple corporates, how you and your clients are measuring the success of it, and when you actually consider something a success, because there might be multiple successes along the way.
Yeah, the other day we were calculating the percentage of companies or venture concepts that we validated and the other ones that we killed during the process, and it was a very high percentage. And this is because during the validation process the thing is iterating and pivoting. But in my opinion, this is not a good metric, because the thing that you need to look at is the number of companies that you are creating and if they are alive or not, obviously. But I believe that the real result of a process of building ventures with corporations need to be measured in an alignment process with the corporation. I mean, the KPIs, even if they are not quantitative, I think they need to be aligned with the corporate. For example, one of the things that, in my opinion, is key to decide if we are going to create a new venture or not is many companies want to grow inorganically, and corporate venture building is not about that. So if you align yourselves with the corporate at the beginning and say, hey, this is a good investment case, there's a big opportunity, you can leverage a lot into this business, blah blah blah, but you are not going to see real results. This is not going to impact your P&L for the next 1, 2, 3, 4 years. and the corporate is aligned with that, you're going to see this is a success. And one of the main problems that we experience, I think that we all experience, is a cost because of the name that we put on the thing. I mean, corporate venture building is just a corporate creating a new business, you know?
So we see also like this is, even failed projects might be a success as well, because you have like a learning curve, and you know, or even killed project or idea can be a success because you not entered into something that is costful and so on, and then you actually avoided something that you thought might be a good idea, and then you avoided it, which is considered success from the corporate side, but not, let's say, success from the project side itself. Yeah, so I think we in terms of the discussion, we need to finish, but we also wanted to have a couple of more minutes for audience to ask questions. So yeah,
I have to add that Andres was very active during the whole of the roundtable, and did already answer some of them. So I will just add, maybe streamline the last question from, maybe you guys have something to add to it. From Marela Wojcieszek from Huge Things. The question would be how to tell whether a corporate is ready for venture building and what budget and time is necessary for a corporate to test the venture building model. Andres, you did good. You did post your answer. I don't know, guys, if you have some additional information to add to that.
Yeah, it's Andre, you want to go first?
No, I think I provided my answer already. I think Adrian.
Yeah, Adrian. Yeah, Adrian.
Yeah.
Do you want?
In my opinion, they need to be very, very committed in building new businesses, even if this is a first try. And regarding the budget and time, I would say that enough money to see at least 1 or 2 ventures till the end of the process. And this is about, let's say, 1 or 2 million euros, and let's say 6 to 18 months of time between you identify the business opportunity, then you validate it, and then you launch the company, create a team, and whatever. My opinion, yeah, 1 or 2 millions can be less, obviously, and 6 to 18 months.
Okay, yeah. From our side, we see that it doesn't necessarily require a lot of capital at the very beginning. You need to have considering 2 different projects, of course. But if you have like seed money to actually launch the idea and turn the idea into something that is a venture, like you need to tick some tick boxes in order to move forward. And if you're able to spend a budget for this, and this is probably between 50,000 euro for such exercise, or 100,000 euro tops, with building a bit of pieces of the technology to properly validate it. But not necessarily always you need to have a budget, because you can test things. You can create, let's say, be a pilot platform. We have a couple of cases like that, where corporations said, okay, I will pay for the product that will be an outcome of this venture. I will be a test field for you. I will give you hints, and I will give you some resources to do it. And I will take a very like a sweat equity type of model, but for a corporation. So they are an open platform for testing. And we as venture builders, we are then saying, okay, why not to go to VCs and fund this project, because this is a project or idea that already has a first customer. So from the corporation side is just signing an LOI and being prepared and committed to basically open themselves up, and pretty much that's it.
Thanks. I think, Parul, you had some questions for Jordan. Unfortunately, he wasn't able to last to the end of the conversation, but probably you can contact him directly. Then, well, I see a lot of questions answered by Andres. I think we're heading straight to the last minute of our meeting. Had a very full 1 hour and a half. So, guys, thank you so much. Maybe let's wrap up. Jędrzej, what do you think?
Yeah, thank you very much. Just to let you know, we, as the Heart, we are running, like Tosia mentioned, and Tosia is a manager of this whole initiative. We run a corporate club. We are focused on venture building, obviously, and actually this event was a pilot, or was a start of a bigger session that we are also creating with Slash Builds and other venture builders, actually to create some guidelines for venture building and create some guidelines for corporate venture building. In the next year, we will focus actually in a less generic way on the specific topics and bits and pieces of corporate venture building and venture building in general. So super happy to continue this, and super happy also to hear your feedback, where you want to deep dive a little bit more, where there is a knowledge that you want to have. And we'll take it into consideration, of course, and we'll create agenda for next year, and yeah, we'll get the ball rolling. So thank you very much again.